And then we have the major euro dollar, pound dollar, and Aussie dollar. Basically, these three I'm holding pretty much the same bias. Okay, the pattern looks more or less the same as well. So we kind of see this as a push down here. If you can get a corrective structure, we're gonna look to sell. Okay, pound dollar as well. If you can get a corrective structure, we're gonna look to sell. I think very straightforward, right? Because the first move is impulsive to the downside. Aussie here as well, impulsive to the downside. If we can get a corrective structure, we'll look to sell. Okay, so this three pairs here, if you build in the expectation of time, you realize that this setup here would unlikely be ready for us to enter a trade within the week. Okay, so this is a little bit on time expectation, right? Which to me is important for traders because if today you are not able to tell yourself, roughly when this setup is gonna be ready, you're gonna have that emotional psychology aspect that you'll be like, would I miss this trade? Would I miss this opportunity? Right? You'll be always on the edge of FOMO, okay? Because you'll be afraid of missing something. But once you'll be able to have this ability of what I call time expectation, then that's where you'll be able to say, okay, this trade, unlikely I'm gonna have it within the week. And what you do, you just chill off, right? You just go and do something else, or if you have other opportunities, to focus on those. Okay. So how do I put in this perspective of time expectation? Okay. I think I covered this with some of you guys in the past as well. Okay, we utilize a time factor perspective. Okay, so let's say this is the impulse move, right? This impulse move from the top to the bottom roughly took about 10 days. Okay, so if today I want the market to pull back correctively, okay, there are some key terms you need to catch. This market came down impulsively using a 10-day cycle, 10 days duration. If I want the market to pull back correctively, the definition of corrective is slow and doesn't have a lot of momentum. So if the fast one, which is the impulse, took 10 days, then the correction minimum, I need to give it also about 10 days. Can follow that thought process, right? Of course, sometimes it may take a little bit longer, but the minimum you expect is 10 days. Okay, now you don't need to be like super exact. We're not talking about like, to the time, to the hour, right? We're talking about rough estimation over here. So if I'm going to project, okay, the drop is impulsive, it's 10 days. If I'm going to wait for a correction, I want it to come down slow. I want to retrace slow. I need to give it time. So estimate about 10 days. When do you think this would be, right? And that's where I can put in a vertical line. And let's just do a rough estimation, right? That will be on the 29th of March, right? So it's actually closer towards maybe end of next week. Okay, now again, we're not talking about specific date and time, right? I'm just roughly estimation. So I know, okay, this is unlikely going to be something today. It's unlikely going to be something within the week itself. It's something next week, right? So with that kind of time expectation, right, as I mentioned just now, it's more of a psychological aspect that help you as a trader, because it will actually take you off the fence of being FOMO. Okay, one of the component that causes traders to be FOMO is afraid of missing opportunity. But if you dig deeper, okay, why would you be afraid of missing opportunity? There are many other reasons, but one of the main reasons is also because you do not know when the opportunity will present itself for you to enter and exploit that opportunity, right? So put in another context, put in another example, right? If today you are looking at Bitcoin, okay, Bitcoin is falling, right? And then of course we're also getting close to the Bitcoin halving. And I'm pretty sure that traders will start to feel the FOMO effect, right? Should I get in now? Now it has dropped quite a bit, okay? What if I don't get in now and the market U-turn and, make another new high? Okay. So again, you have all this of, what is all this element is basically FOMO, right? The fear of missing out. Okay, but where did this fear comes from? Okay, and I always share this. You want to go deep. You want to always ask yourself this question: why? Okay, to kind of like discover the answer behind it, because everyone feels FOMO for different reasons. Okay, so if I put this into example, okay, if today you feel FOMO on Bitcoin, you want to ask yourself, okay, how come? Why am I feeling FOMO? Why am I afraid of missing out on the opportunity? Okay, maybe answer can range from you have missed out in the past. Okay, answer can range from I've seen so many people make so much money on Bitcoin, but I missed out on that. So this time around, I don't want to miss it. Okay, you might be I don't know when it will reverse. I don't know when to get in. So you realize that every other answers, if you start to ask again, why? Okay, you start to go into a deeper level. Okay, the deeper you go, the more you discover about yourself, the more you're able to develop that emotions and psychological management. Okay, so this skill set is actually very, very important. Okay, so it's actually something beyond just the technical aspect of trading. Okay, but something that I believe every trader should have. Okay, so these three things here, euro dollar, pound dollar, and Aussie dollar, will probably just be patient, right? Chill out, see how the market develops. Unlikely we're gonna get anything within the week anyway. So we'll see. Okay, so I hope that also kind of like cover a little bit in terms of how to deal with FOMO and why is it important to have the time expectation.